Volatility grips Wall Street as tariff uncertainty takes center stage.
Canada is very tough. They're very, very tough to do business with, and we can't let them take advantage of the U.S.
I think people are going to be truly shocked at the pricing they're going to see on the cars, on the lumber, on the clothes, on the food. This is going to be a mess.
It's Donald Trump's world, and we're all living in it. The chaos that's spread in the wake of the US president's tariff drama has left few global markets untouched, including Australia's. So, what now? Hello, I'm Chris Bourke, and welcome to the Bloomberg Australia podcast. What a week it's been for global markets. One day, the trade war is on. Next day, wait, trade war is on hold. Or maybe it isn't. It's been, frankly, exhausting keeping pace with events. So I think we need Richard Henderson, our cross-asset reporter based in Melbourne, to help us calmly unpack just what is going on and what impact we can expect on our own markets in the coming weeks. Richard, welcome to the podcast.
Thank you, Chris.
So let's quickly recap. Over the weekend, Trump confirmed he was slapping 25% tariffs on Mexico and Canada and 10% on China. On Tuesday morning, our time, he struck deals with Mexico and Canada to delay those tariffs by a month after both countries vowed to retaliate. And then later that afternoon, the China tariffs went ahead as threatened and China swiftly retaliated. So how did all of this impact markets?
So over the weekend, we saw a big drop in crypto. Crypto, of course, trades 24 hours a day, whereas the stock market is only open during weekdays. And that was a real indication that the stock market would really struggle when it opened on the Monday. And that's exactly what happened. We saw that in Asia pretty powerfully. Australian shares dropped meaningfully. In the US, obviously, that is much later in the Australian day. In the US, stocks fell, but then they started to recover, especially when Trump finally came out and offered this 30-day reprieve on the tariffs on Mexico and Canada. So that's basically what happened in markets. There was a big bid for haven assets, things like gold and the US dollar in particular. So we really get a sense that that's where investors might like to park their money while we see some of this uncertainty.
Yeah, I really do remember walking into the office Monday morning and the screens were a sea of red. Look, but what were the main sectors on the Australian share market that were hit in that initial reaction, which I guess tells us what sectors investors think are most vulnerable to a trade war?
Tellingly, all sectors in the Aussie stock market fell on Monday, and that's a sign of a broad-based sell-off. Investors are really wanting to rein in risk. They see this as a key risk for the year. The two big ones in Australia are the material sector, that has all the big mining companies like BHP, and also the financials sector. That's all our big banks. Together, those sectors alone make up half the Australian stock market, give or take, and they were among the hardest hit. So that really tells us that investors were very worried about tariffs. The risk of a global trade war is real, and we saw equities sell off meaningfully in Australia because of that.
You mentioned crypto before. I know you write about crypto quite a bit. We know that cryptocurrencies can be volatile at the best of times. I often edit markets stories with Bitcoin price action in, and have to change it several times before publication, which can be very annoying. But look, why was the response in crypto so severe this time round?
Crypto it was described by Goldman Sachs once as the ultimate risk asset. You know, we see crypto volatility. It's always one of the most volatile assets. It also trades all the time. So it's really handy for investors to use crypto to express a view about what's happening in the global economy or global markets when other markets, like the stock market, is closed. So that's why we saw such intense selling over the weekends. In Ethereum, for instance, that's the second largest coin by market value. There was a drop of as much as 26% on that Sunday in the US. So that really speaks to the magnitude of selling and volatility and how investors use crypto to trade through some of this uncertainty and news flow.
So this obviously remains a very fluid situation. It does feel like one of those kind of anything can happen moments in markets. But what does all this uncertainty mean at the end of the day? All this whiplash and flip-flops, what does it mean for stock markets going ahead?
The bottom line is more uncertainty means more volatility. So I think investors, when they saw these 25% tariffs on Canada and Mexico, they realized that the trade war is real and they had to respond. These aren't empty threats. But then you get this 30-day reprieve for both, and both countries are trying to address some of Trump's concerns about border security, about the drug trade, fentanyl in particular, coming into the United States, creating lots of social issues, health issues. And so you get a sense that potentially this is Donald Trump, the art of the deal, looking to use the threat of tariffs to gain some sort of goal, policy goal, and finding some success in that. And so investors are caught in the middle. They have to respond. They have to price in the risk of tariffs becoming real. But then they have to realize that maybe this is Trump bluster, Trump trying to get something from these countries and finding, we can say, some early success in that.
Yeah, that's a really key point. The motivation of Trump and the US administration still kind of remains unclear at this stage. But there's obviously been a lot of speculation ever since Trump won the US election, really, about how his policies, including tariffs, will hit the global economy. So now we're seeing those policies being enacted, starting to be enacted. Is it too early to really gauge what these tariffs are going to mean for inflation?
This is one of the biggest questions facing investors this year. Will tariffs come into force, first of all? And if they do, even at a reduced level of some of these, 25%, et cetera, we're seeing, will they be inflationary? And there's a lot of uncertainty here. The broad consensus thinking is yes, tariffs are naturally inflationary, and slapping 25% tariffs on, your two border countries, Mexico and Canada, will damage the US economy, will hurt US consumers. There was a wonderful piece of analysis from the Peterson Institute for International Economics, and they basically said these tariffs that have been announced would impact the average US household, what they call the typical US household, to the tune of $1,200 per year. So if you think about that money, that's less money circulating in the economy because it's being sucked up by the effect of these tariffs. That's less money for corporate revenues, corporate profits, and that means in a stock market sense, companies listed in the stock market are going to be facing a hit to revenue and profits that should, all else being equal, impact their share price, reduce their share price. And so we're starting to see some of that analysis from the investment banks that are starting to say, okay, well, if tariffs really do come in, then it will hurt the stock market.
And that's a really important point, because while we've been talking about the Australian share market, let's not forget we're all invested in our super funds, and our super funds have just as much exposure to international shares as they do as domestic ones. But look, let's not forget also that these more severe tariffs against Mexico and Canada of 25%, they're only on hold for the time being. They're still apparently going to be enacted in less than a month's time. So what is that going to mean for global markets if they do become enacted? Are we looking at a situation where the kind of action we've seen this week is going to be the norm, where markets are essentially at the whim of Trump's social media posts and how often he changes his mind in one particular day?
Basically, yeah. If you're an investor, you have to now be reactive to that. You're not going to base your whole thesis on a Trump tweet. Probably not, right? But you are going to have to say, well, okay, there is a likelihood, it might not be 50%, maybe it's 20% or 30%. There is a likelihood that what Trump is saying he will do. And we have seen that in the past. And so if you're an investor, you really do have to take it into account. The broader point on the global economy, what do tariffs do? A tit-for-tat trade war is bad for growth. It will hurt the economies of the United States, Canada, Mexico, China, if we see tariffs as announced come into force. And so that's really something to be keeping in mind. That will have a flow-on effect for asset prices, if we're talking stocks. that will have potentially an impact on US inflation, which then will reverberate throughout the world. That will have an impact on currency markets, leading to, all else being equal, a stronger dollar, a weaker Australian dollar. So we're having to sort of pass through these effects. And that's a real big challenge for investors this year because they're quite complicated. They're all interconnected.
And when we come back, how much attention is the Reserve Bank of Australia paying to this market turmoil? Welcome back to the Bloomberg Australia podcast. I'm Chris Bourke, and today I'm talking to Richard Henderson, Bloomberg's cross-asset reporter based in Melbourne. Rich, Australia has a very important rate decision coming up in less than 2 weeks, where we could very well get our first rate cut since the pandemic. Will the RBA be taking all this tariffs drama into account when it hands down that decision on February 18th?
That's a really good question. I think on balance, no. They'll be keeping an eye on things. Obviously, a tariff war, trade war will have significant impact on the Australian economy. We have this amazing reliance on China. If China's economy starts to contract, and we're seeing such big pressures, economic pressures within China over the last few years, if tariffs really add to that and lead to less demand for Australian goods, like iron ore, say, by China, then that will have an impact on the Australian economy that the RBA will have to respond to. At the point now, though, I think the RBA will be really wanting to take a wait and see approach. So I don't think that will have any meaningful effect on the rate decision coming up.
So homeowners may still potentially get some relief on February 18th, but we'll just have to wait and see there. But you know what it's like. Investors will pore over every word on that statement that is released on February 18th, and I would be surprised if they didn't at least mention the kind of action that we've been seeing.
I think markets. So. Yeah, there's a history of the RBA flicking to an idea like that to say we're keeping an eye on so-and-so development in the global economy. So I think that would not be out of the ordinary to see that, but also to say we're not responding to it at this point. And I think we also need to keep in mind that, you know, Trump is different from other US administrations, US presidents, and you have to respond to what Trump does, not what he says. And so even though we're seeing this 25% tariff on Mexico and Canada, we do now have that reprieve. And so we could see some sort of deal emerge in that 30-day window that then would neuter these potential tariffs. And so that's what the RBA and global investors really have to respond to, what actually happens, not what might happen.
Yeah, really good points. So we've been taking a look at the largely negative effects on markets from the start of this trade war. That's not the full story, right? I mean, what asset classes out there could actually or are actually benefiting from this volatility?
The knee-jerk reaction into defensive assets was very much on display this week. We saw gold touch a new record high. We saw an index of the dollar, basically the US dollar against a basket of currencies, rise sharply. It touched briefly the highest level since 2022. So they're two of the most common haven assets. So there could be more demand for those if we do see more action on the tariff front. And then there's things within the stock market, you know, if we're talking about the US stock market, themes that endure in the longer term, things that investors are really positioning for. Artificial intelligence is a good example, although if you think about companies like NVIDIA, they're very richly priced right now, so they're quite vulnerable to a sell-off. But there might be other companies within that theme investors like that could be insulated from some of the broader market sell-off in the stock market relating to tariffs.
So I guess the message is hold tight and wait and see.
Get used to volatility, I think, is one of the key takeaways here, which we sort of expected from Trump, but it is one that investors will have to, take to heart.
Thanks, Rich, and thank you for listening to the Bloomberg Australia podcast. I'm Chris Bourke. This episode was recorded on the lands of the Wurundjeri people of the Kulin Nation. It was produced by Paul Allen and edited by Rebecca Jones and Ainsley Chandler. Don't forget to follow and review the show wherever you get your podcasts and sign up to Bloomberg's free daily newsletter, Australia Briefing. Go to bloomberg.com to subscribe.